The world of finance is buzzing with a bold prediction. Cathie Wood, a renowned investor and head of ARK Invest, has made headlines. Her forecast: Bitcoin will reach a staggering $3.8 million by 2030. This projection represents an astronomical return for current investors. Imagine a potential gain of over 6,200% in less than a decade. Wood's prediction is rooted in her belief that Bitcoin is evolving. It's transitioning from a speculative asset to a digital store of value, much like gold. This prediction isn't based on mere speculation. Wood points to several factors driving Bitcoin's potential. She highlights Bitcoin's increasing acceptance as a safe haven asset. Additionally, she emphasizes the growing institutional adoption of Bitcoin. Finally, Wood envisions Bitcoin playing a significant role as a currency, especially in emerging markets. Her most bullish scenario hinges on institutional investors embracing Bitcoin. If they allocate a mere 5% of their portfolios to Bitcoin, Wood believes a $3.8 million target is attainable. Bitcoin's journey has been nothing short of remarkable. From its humble beginnings, Bitcoin has delivered eye-popping returns. Consider the period from the summer of 2010 to the summer of 2011. Bitcoin witnessed an astounding surge, gaining roughly 30,000% in value. While past performance is never a guarantee of future results, this historical data is hard to ignore. Wood's predictions, while bold, are not outlandish when we consider Bitcoin's track record. The potential for substantial growth is evident, especially when compared to traditional asset classes. Bitcoin's potential shines through. The S&P 500, a benchmark for the US stock market, has average annual returns of 12% over the past decade. Gold, often considered a safe haven, has only returned 5% annually during the same period. It's crucial to understand that Wood's $3.8 million prediction represents the most optimistic scenario. While possible, it hinges on a confluence of factors aligning perfectly. This includes a seismic shift in how institutional investors allocate capital. Wood also presents a more conservative and perhaps more likely scenario. This base case projects Bitcoin reaching nearly $700,000 by 2030. This prediction is still remarkably bullish, suggesting significant growth potential. Wood's base case is anchored in factors like increased adoption in emerging markets. She also sees high net worth individuals seeking asset protection, driving demand. On the other end of the spectrum is Wood's bear case. This scenario, while less exciting, still suggests substantial growth. Even in this pessimistic outlook, Bitcoin reaches just under $260,000 by 2030. This prediction is driven solely by Bitcoin's growing acceptance as a digital store of value and continued institutional adoption. Cathie Wood's bullish outlook on Bitcoin is driven by several key factors. One major driver is the growing perception of Bitcoin as digital gold. Investors are increasingly viewing Bitcoin as a safe haven asset. Events like the 2023 banking crisis solidified this perception. During uncertainty, investors flock to Bitcoin for stability. Increasing adoption by institutional investors is another significant driver. Giants like BlackRock and Goldman Sachs have added Bitcoin to their portfolios. The approval of spot Bitcoin ETFs is further fueling institutional interest. This ease of access is likely to drive demand and price. Cathie Wood firmly believes that institutional adoption is crucial for Bitcoin to reach its full potential. Her $3.8 million prediction hinges on institutional investors embracing Bitcoin in a significant way. She argues that if institutions were to allocate an average of 5% of their portfolios to Bitcoin, it could propel the price to her ambitious target. However, achieving this level of institutional adoption is no easy feat. Currently, institutional capital is largely concentrated in traditional assets, stocks, and bonds. While investments in alternative assets, including cryptocurrencies, are growing, they still represent a small fraction of overall institutional portfolios. Despite these challenges, Wood remains optimistic. She points to the growing number of institutional investors expressing interest in increasing their Bitcoin exposure in the coming years. As more risk-averse players enter the market, it could lead to a significant influx of capital, driving Bitcoin's price higher. Can Bitcoin hit $3.8 million? Cathie Wood's prediction is ambitious but requires skepticism. It would need a monumental shift in institutional capital allocation. Institutions must move away from traditional assets to Bitcoin. Even if it falls short, Wood's conservative predictions suggest significant growth. While reaching a 5% allocation in institutional portfolios by 2030 might be overly optimistic, it's reasonable to expect continued growth in institutional Bitcoin investment. As more institutions recognize Bitcoin's potential as a store of value and a hedge against inflation, they are likely to increase their exposure. This trend is further fueled by the increasing availability of investment vehicles designed specifically for institutional investors. Products like Bitcoin, ETFs, and custodial services are making it easier and more secure for institutions to invest in Bitcoin. These products are attracting more risk-averse players who were previously hesitant to enter the cryptocurrency market. The exact level of future institutional investment remains uncertain. One thing is clear: institutions are becoming more comfortable with Bitcoin. This growing acceptance, coupled with the increasing availability of investment products, suggests that institutional investment in Bitcoin will continue to rise, potentially driving significant price appreciation in the years to come.